Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the 2019 drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Welcome back to the show, Mike.
Oh, it's great to talk to you. It's an interesting time as we head into the final weeks of the year, that's for sure.
Mike, what do you think has been the most interesting investments of the year?
Well, it's worth taking stock to see what has done the worst and what has done the best, because often the worst performing sectors tend to experience tax loss selling in December, and mutual fund managers and money managers don't like to show that they own them, so they sell them too in the last couple of weeks. And then once that selling clears out, you tend to get a bounce in January. So if we looked at the worst, you got dairy products. That's not a shock. Agriculture commodities have done so bad, so stocks like Mosaic have done particularly bad this year. Consumer credit companies are doing bad. Conglomerates, construction companies in the United States, movie theater stocks are doing bad, telecommunications, and so forth. And of course, the marijuana stocks have done terrible too, crashing about 3 times. In August they crashed, and then in October they crashed, and then in just the other week they crashed again. I mean, you're talking about stocks falling 30-40%. Multiple times in a row. But I think that sector is probably one of the best ones to try to play for a bounce back in January, because not only do you have the tax loss sellers and other people who are likely to sell, but you also have a lot of people who have shorted that sector. So those people are likely to cover and take profits once the new year comes. So that's something I'm looking at as a potential trade. But if we flip things around and look at what's performed the best, that's also better to find stuff that you might want to actually invest in. If the trend is new to this year, the performance is really outstanding. And also, those stocks and sectors tend to do the best in the final weeks of the year, because mutual fund managers like to show people that, hey, yeah, I did own them, when they look at their annual statements that they put together at the end of the year. So if we look at that, the semiconductor sector in the United States has done very well. Stocks like AMD, that's Advanced Micro. It's actually the best performing stock in the entire S&P 500 year to date. And sporting goods stores have done well this year. Some computer stocks linked to semiconductors, auto dealerships, casino stocks, interestingly enough, have done well this year after having done miserably last year. But something that got my surprise when I looked at this list is silver stocks are at the top too. And when I'm making this list, I use software called TC2000. Anyone can get it, and you can use it to rank the sectors. So I'm looking at this year to date, and 2, 3, 4, 5, 6. And the silver stocks out of 241 sectors are ranked 13th in performance. So that's pretty outstanding. And you can see it when you look at stocks like Coeur d'Alene Mining, which is at $7 and started the year out around 4. Wheaton Precious Metals is at $27.50 when it was around $19. Pan American Silver, of course, has also done well. So, and also so have the smaller silver mining stocks, of which there are a few. So this is a sector that I own Pan American and Wheaton Precious Metals myself. And this is a sector I think we can expect to do very well next year, as we've seen gold and silver do well too this year. But what's worth making note of is that silver prices have been pulling back since Labor Day, and so is gold, but these silver stocks have barely fallen off their highs at all, and many of them look like they're likely to break out and start another run before the year's over. So that's a good positive divergence. In the metals world, the action in the mining stocks compared to the metal tends to tell you whether the trend is overall bullish or bearish, meaning that if the stocks are doing bad and gold or silver are going up, that's usually a big warning sign. So, for example, in 2011, when silver went parabolic at the final run of that last bull market, the mining stocks didn't even go up in the last 3 months of that run, warning that was a top being made. And now, when silver has dipped, the mining stocks have barely dipped at all, telling us that, look, this is just a dip in the metals market, not something to be scared of, and it's best just to take advantage of it.
We'll have more with Mike Swanson right after this.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Media recognition from Bloomberg, Reuters, Recycling Trade Publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Mike Swanson. Mike, has the tech sector overperformed, and is it due for a crash?
Well, it's, the semiconductor sector, as mentioned, has done well, with stocks like AMD doing great. But some of them, like Micron, have lagged. But overall, it's interesting. The NASDAQ, of course, has done well this year. The NASDAQ 100 also has done well this year. But the real popular technology stocks that people have bought into over the past couple of years have not done as well as the averages. So, for example, Facebook has been lagging the NASDAQ. Amazon, in particular, has been lagging. Amazon is at 1750, 300 points off of its high. It's below the 150-day and 200-day moving average. Netflix has also been lagging. It's around 293 when the high was 380. So has stocks such as NVIDIA have been lagging. And these have been stocks that from 2017 to really the end of 2018 were the most widely owned among individual investors. So we have seen a bit of a rotation this year from the most popular stocks that had been great performers to now kind of lagging the action. And there's really been a lot of churning going on inside the market from time to time or month to month. So, for example, the Russell 2000 had a strong bounce at the beginning of this year and then lagged the Dow and the NASDAQ and the S&P up until really the other week around Thanksgiving when it finally managed to break out. So this has kind of been one of the stories this year, is that for the average investor who buys the popular stocks that have been the big winners of the past couple of years, it's been hard to beat the market because a lot of those stocks have failed to beat the market. And that's something unique sort of to this year. So a lot of people, and the data shows, have been piling more and more of their money into exchange-traded funds more than ever because they haven't been able to beat those funds. So I think that's not necessarily the smartest thing to do for forever, but it's what a lot of people have been doing. And one reason I think it's not the smartest thing to do is I don't think it's going to start before this year's over, but at some point there will be another substantial pullback or a bear market even, and all those ETFs will go down, and that's when you want to be in those sectors that buck the downtrend and even profit from it, which I think is what's going to happen with the mining stocks, because their action has been tied not to what's going on in the S&P 500, really, but what's been going on in the bond market. It's been a strong correlation between the behavior of gold and silver in the mining stocks and with the bond market. When treasury bonds have gone up, gold has gone up too. So that tells me, at some point, the Fed, they're not going to raise rates. We know that. So there's limited downside to treasuries. That means limited downside to metals. And whenever the stock market does have another 5% or 10% pullback, they'll be talking about cutting rates again, and bonds will go up and gold will explode. So I really think it's not just that the trend is bullish for gold, silver, and the mining stocks, even though we've had a dip since Labor Day, but the long term, I think these are great things to be in because they'll benefit from economic weakness or when the stock market hits a roadblock at some point down the road. So I think that's going to be the real story of next year and really the next decade. Although if we look at this decade, for the individual investor, it's been Facebook, Amazon, Netflix, NVIDIA, FANG, over and over again. Almost every night on CNBC for the past 5 years, that was the talk. But this year, FANG faded away as a theme because these stocks lagged, and now the theme has been just buy SPY, buy this ETF. And that's how we're kind of wrapping the year up. But that's going to be another, when everyone gets into the one theme, it's not going to last forever.
We'll have more with Mike Swanson right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mike Swanson. Mike, has one of the big disappointments of the year been marijuana? So many people, I think, wanted it to do well, and people jumped into it. Millennials thought it was terrific. What's the picture there?
Well, marijuana stocks has, it's been something talked about for really 5-6 years now that we're going to legalize marijuana. That was the start 5 or 6 years ago, and it started first in Canada, finally. It took time, but it finally happened, and in some parts of the United States. And the stocks really ran up into that legalization in anticipation of that for several years. And we're, in the small cap world, the hottest segment of it up until this year, really. And the big cap stocks like Canopy Growth, Aurora Cannabis, were also outside the FANG complex, some of the most widely owned stocks. In fact, on Robinhood, which is a stock brokerage in the United States, they give you a list of the top 100 positions owned by the most number of people, and Aurora Cannabis is number one on the list. More people own it with Robinhood accounts than even own Apple. So that's how popular these stocks still are. But they were popular in the past because they had gone up so much and people were chasing that price momentum. But starting around March, after the legalization finally came, what ended up happening was disappointing because these companies weren't making the profit that legalization was expected to bring. There were hiccups in the rollout of legalization in Canada, but the companies themselves had some issues. They accumulated massive debts, especially the big ones such as Canopy Growth and Aurora Cannabis. So what basically happened was those stocks topped out the spring and collapsed from really May to November. I mean, Canopy Growth was $52 and went below $15. Complete disaster for people. Aurora Cannabis was $10 in March. As we're talking, it's around $2.50. Complete disaster. And really, these companies, some of them, have so much debt, I don't know if they're viable. To me, this reminds me very much of internet stocks in 1999 and 2000, because those stocks went up on the promise of a giant new trend in the economy. Back then it was the internet, and how companies would go online to take advantage of it. And some companies, such as Amazon, are obviously still here today, but many of those internet companies back in 1999, like Pets.com, eToys, and so forth, don't even exist anymore. They went bankrupt. So I think that's going to be the story with cannabis, marijuana stocks and companies. Some of these guys are going to go bankrupt, and they will no longer be in existence in a couple of years, if not sooner. But we can look back, then, and there'll be some doing great, some that will take over the entire industry. I honestly have no idea which one those are going to be, but as things stand now, the stocks are disasters, and when stocks collapse like this, typically what you'll see happen, and I think it's starting, yesterday Canopy Growth was up about 14%, although today it's down 5%. I think it's possible that they finally put in a low when they really fell around Thanksgiving, and they bounced, and I think if they can just chop around here and hold in a range going into New Year's, then they'll be set up to have that January effect type rally because the tax loss selling will be complete. So I want to see if that can happen for a trade in the first quarter. But as an investment, I think it's going to take several years for these stocks to base out and for the wreckage or for the winners to emerge from the wreckage. That's what happened with internet stocks. They crashed in 2000, and it took over 5 years for the best ones to emerge from the wreckage and become winners again. So I think that's where we're at. The thing about the small cap world, though, is if you look at the past couple of years, for a period of time or 6 months or so, Bitcoin was hot in 2017, and there are Bitcoin stocks that appeared. But other than that, the marijuana stocks have dominated the small cap world. They dominated the action on the Vancouver Stock Exchange. But now that they have collapsed, I think that small cap world is going to be dominated by junior mining stocks and exploration stocks. And that's where the action is going to be. We've already started to see that in some of the stocks, but I think that's going to be more apparent to more people as the months go by. And those who have been cannabis and marijuana stock traders will gravitate into the mining world. So I think really that's, beyond just trying to make a trade, I think, in the first quarter, I think the average person would be best to just forget about the cannabis stocks and just move that energy into the small cap mining stock world.
Mike, thank you so much for chatting with us.
Thank you. Great to talk with you.
And we'll check in just before Christmas to see what kind of wish list you have for Santa.
Sounds great.
My guest has been Mike Swanson, editor of WallStreetWindow.com. If you have any questions for Mike or any of our other guests, you can send them to info@HowStreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.